taking. They're sort of breaking
What's up,
down
guys? Welcome back.
penny that's going
Check out Amazon.
wallet, and they want to share our
Doing very well. All that information right there on the screen. Alcoa is doing very well.
because that really.
So what's up? I just got back from a haircut. So I'm going to film some videos for Ryan Scribner today for his online course about investing. I'm just going to do some introductory videos about options. And so if you want to check that out, head to his channel. Look for some links in his descriptions because I forget what the name of the course is. But it might be, I don't even know if it's released yet. I have to double check that. But it's going to be for his online course that he's got going. And yeah, so it'll be cool to check out. So I gotta do some editing and then gotta do some filming. And then we'll come back when the market closes. Yo, what's up, guys? Welcome back to RT2CC Comic Club. Justin again. And we've been on a little bit of a break because, again, falling behind, and I'm trying to catch up without falling more behind. So I'm bringing to you another recap video. So this is a recap over Thursday of last week, Friday, which is 420. Happy belated 420, by the way. Really belated by the time you see this. Monday, April 23rd, Tuesday, April 24th, and obviously today, the 25th. So 5 days recovering this time. Not really much happened, in fact. So that's why I figured I could do a recap video, because it all's kind of following the same trend and same summary, same whatever, same headline. So we'll talk about that. So I'm just going to go into the balances first. So on Thursday we finished at 156,339.94. So we lost about 4,100 bucks there. Friday we closed about $6,300 lower at 149,990. This Monday we closed at 145, so we dropped another 4,600. Yesterday we closed at 131. Horrible day for us yesterday. And then today we were down at like one point to like 124, and we closed at 130. So we came back pretty strong in the afternoon. So that's how the balances have fared, which has been horrible because down every single day. We had 2 really good days. The last video you saw, we made 13 grand on Tuesday, and then 4 grand Wednesday, and then just started shit hitting the fan again starting on Thursday. So the overall theme is basically people are still uncertain. The uncertainty is just clouding everyone's judgment, I think. There's just a lot of stuff. There's a lot of uncertainty things happening that's kind of overshadowing all the positives that's happening. Like a lot of companies are reporting strong earnings, and we'll talk about that a little bit later, but it's just the treasury yields just like overtaking the headlines. They just hit 3% recently. You know, people are still uncertain. They're still talking uncertainty with the trade tariffs with China, uncertainty with Syria. There's just a lot going on that people are uncertain about. It's just overshadowing everything else. So what I'm going to do is go into some article headlines. I'm going to try to talk to them about them as fast as possible, but I want to keep this video to 10 to 15 minutes because it is covering 5 days. So if I can keep it under 15 minutes, I think that'll be good. It'll help me edit it a little bit quicker than the longer ones, and we can get caught up. So let's just get right into it. I'm going to go through some articles here. Yeah, we'll come back to the balance here at the end. So let's just talk about the articles. Then today we'll talk about what happened today, and then we'll just kind of treat it as a regular episode. So let's start with Apple. So Apple says it's not pursuing universal software platform. I'm going to post links to all these articles in the description so that if you see one that interests you and that you haven't read yet, you can give it a read. Most of you probably, this might be old news to you if you've been keeping up with the stocks that you invest in. But if you haven't read any of these, I would highly suggest giving it a read. So Apple says it's not pursuing universal software platform. Basically, they were thinking about merging the iOS apps with macOS apps to kind of let them be usable on both platforms. The problem with that is if you try to make it work for both, you're taking away from the stronger side of the Mac OS to make it fit for both. Like, so what Tim Cook was saying basically is, you know, we want our Mac apps to be as best as possible, and we can't make it as best as possible if we're trying to also make it work for an iPhone. So that's basically the gist of that. So you can have a read for that one. The next one about Apple, their new iPhone cancellation suddenly makes sense. This was about a leak basically saying how the newer iPhones are going to be that much better. They're going to have bigger screens, and also they were able to make the phone cheaper, they're thinking. This is according to the leaks. Now, however, I just saw a leak today from Everything Apple Pro saying that the new iPhones might be the same price and more expensive than this year. So the jury is still out on that one. But this article is saying that they could lower the prices. And so there would be no need for an iPhone 10 the way it is now. So that's what that article says. You can have a look at that one. The next one is about Amazon. So this is news from Thursday. Amazon, Jeff Bezos recently announced that they have 100 million subscribers, which is just phenomenal. And again, you think that would be great news for the stock, but it's still kind of going down. So that sucks. But this is the first time he's mentioned how many subscribers they have, which I think is crazy. I thought there would have been some number somewhere before. But yeah, apparently Google had strong earnings, but their stock also went down. Again, we're going to talk about that later. I don't know what this tab was. I'm sorry. Okay, anyways, this article is called After the Bell, Dow drops 83 points as yield spike brings back bad memories. So again, we're talking about yields again. You'll notice a little trend here that yields are have been dominating the news lately. So you can read this article here if you want. There is an article that I'll be talking about soon that talks about the inversion. And shout out to whoever mentioned that on one of my recent videos, which was probably like a month ago you mentioned this. But you talked about watching out for the yield inversion, and I really had no idea what you were talking about. But reading from these articles, I am starting to learn why that's important. So we'll talk about that in a little bit. I'm just trying to zip through these so the battery doesn't run out. This article made me feel good. This was a Friday article. It said, or I think this was Thursday. It said stock optimism hits 2-month high as markets recover. So that was a little positive. They said that the sentiment's high. However, again, in the article, it talks about as investors grapple with prospect of changes to trade policy and geopolitical tensions, optimism has been below the historical average for the 8 straight weeks. Even though it hit like a 2-month high, it's still below the average, they're saying. And again, it's because of all the stuff that's going on. I mean, makes sense, right? Okay, so the next article. Let's see. These are articles from Friday. Just trying to whip through these. Okay, so Apple's MacBook Pro battery recall ends a bad week on a low note. So again, I guess they reported a recall for these batteries. They're trying to fix it. I believe they said everyone can get a free replacement. Don't quote me on that though, because I didn't read the full article. I briefly read through it before, but Apple has been struggling. They went down $7 on Friday, so not good. And there was an article that I'm about to read that mentions the yield curve. I think I might have closed it already, but it says the inversion of the yield curve has been an accurate predictor of recessions. That's why that's such an important thing. And we'll talk about that in a little bit because I'm waiting until I get to that article that talks about it. This article says, will the stock market rally continue? Watch these 4 factors. So they're talking about the moving averages. The Dow Jones all fell below their 50-day moving averages on Friday. Apple stock tumbled below, just above its 200-day line. That's also bad because you don't want to go below the 200-day moving average. That could be a symbol or a signal that you're going down further. So yeah, there's again stuff about the Treasury note. The Treasury yield shooting high at 2.96%. So I would recommend reading that article if you haven't read that. Now, okay, here's about the inversion curve with the yield. So this article is called "Fed Must Be Alert to Imbalances Given Unusual Timing of Fiscal Stimulus." Brainerd says, so definitely worth a read. This is a really good article. I'm going to definitely read this again. They're saying that, because of all the timing with things, it could create imbalances. But another one said that the Fed might not alter policy if the stocks pull back. And so there's kind of people on both sides of the coin here. But I want to talk about the inversion curve. It says here, an inversion of the yield curve has been an accurate predictor of recessions. And that is when they're talking about when the premium between the 2-year Treasury note and the 10-year Treasury note gets closer and then eventually flips where the 2-year, you get a higher return on the 2-year note than you would on the 10-year note. So I don't know. I'm not an expert on that, so please correct me if I'm wrong. But I've never studied Treasury notes before and how they relate to stocks. So this is the first time I've really been paying attention to it, as you guys have noticed, because it's just all over the news now. And so anyways, this next article, stock market investors brace for months of political uncertainty as midterms approach. I haven't read this article yet, but if you haven't read it either, link in the description. There's just so much going on. You don't have to read everything, and a lot of you probably are reading already, so that's good. Keep reading, keep staying up to date. That's the best way to be prepared. This one was called. This one was a good one. Okay, this one says stock investors are freaking out about bonds ending a 3-decade-long bull run, but should they be? So this article brings up good points that says we should not be freaking out, and that flattening of the yield curves, when the 2-year yield and the 10-year yield get like closer together, they call it it's flattening. This one guy said that it actually preceded really good runs with the stock market. So read this article because I read it, but then I skimmed fast through it. But here it says the inverted curve, where shorter dated yields exceed those for longer dated debt. A dynamic known as inversion rings alarms because it has faithfully preceded all recessions since 1960. So that is important. But again, keep reading the article. The guy mentions this guy, Raymond James analyst Andrew Adams argues that even narrowing yield spread between the 2s and the 10s results in an inversion, and that not every narrowing spread results in inversion, and that some of the best stock market performance has come amid such flattening yield trends. So read that. It's just really good. I would say the one article you should definitely read out of all of these if you don't have a lot of time. Definitely read this article. Again, stock investors are freaking out about bonds ending a 3-year, decade-long bull run, but should they be? That's the one article I'm going to reread a few times just to make sure I understand what's going on with that. And I would recommend you guys read that as well. Okay, so now we're in Tuesday's news. Okay, stocks went down a lot. Kramer made a video talking about the S&P 500 cash index, but he says the NASDAQ 100, he said that needs to, I forget. He said that it could be nothing, we could be just worrying over nothing, but he was talking about the NASDAQ 100. He said it needs a hold above the February lows of 61.64, and then it also has to break out above last week's highs of around 68.56. If it does break high, it could keep going up. For the S&P 500 cash index, a 3% increase up above 27.25 would put the index in good shape, but he says if obviously 3% in the wrong direction down would be really bad. There's so much going on. I don't know if I like these recap videos. I might just do maybe 2 days at a time. Doing 5 days is kind of a lot. But yeah, so I'll put a link in the description for that video. You can watch that. Now let's go to April 24th. Oh no, this is still from April 24th. Another guy, Todd Gordon from tradinganalysis.com. There was a video on him. I'm going to try to find that one and put a link in the description. He was talking about the NASDAQ 100 ETF, the QQQ. He was saying that keep an eye on the 50-day and the 200-day moving averages. Watch out for it to hit 155 in the next 2 to 3 weeks. So I have a chart here on the screen recording. The NASDAQ currently closed today as of Wednesday, February 25th at 158. But you can see here it did touch 156.79. That was as low as it got. So he says if it breaks below 155, you should be kind of scared. And he talked about lots of vulnerability with Google. He talked about a chart with Google, Facebook, that they're breaking below their 200-day moving averages, which is bad. Netflix, he said if it could hold at a 320, it could still be a buy, but it already dipped below 320 already. Amazon, he said, still looks like a good buy. And a lot of analysts have Google. They still like Google with price targets between 1,200 and 1,350, which is way higher than it is now. So all in all, people still like Google for the long term. And I still like Google as well. That's my personal opinion. Okay, now let's go to today. So today was kind of scary because stocks started down, then they came even, then they came down again. It's just been going all over the place. But I did see an article from a couple days ago about Universal Display. So let's talk about Universal Display again. This article was titled Better Buy, Corning Inc. versus Universal Display Corporation. They both make components for displays. Definitely give that one a read, but he says basically if he had a pick, he would pick Universal Display. Their numbers are really good. Their growth is much better than Corning's, and he just thinks that they can produce a higher percent return. And they took such a massive hit already that that's just me. I still think it's a decent price now, considering it could easily go back into the hundreds. But let me try to find something that he mentioned here. Let me see. Okay, so he mentioned that Universal Display gets paid by the total surface area. This is very important because I didn't really realize this. I didn't really think about it, but it makes sense. They get paid based on the total surface area its customers cover in OLED elements. So large screen TVs may soon become the company's main driver of revenue growth instead of smartphones. It says one 55-inch TV represents the same top line sales as roughly 100 5.5-inch smartphone screens. Again, I still think the OLED TV revolution hasn't started yet. The prices are still coming down. Again, my next TV is going to be an OLED TV just because the stuff that's coming after that, people are predicting, like micro LED, that's still like 5, 6, 7 years down the road, and people haven't found a way to even make it efficiently and affordably yet. So I don't think it's an immediate threat to Universal Display. And what would stop Universal Display into getting into that industry? Like, I think they could easily get into that. They have a lot of experience with OLED, so again, I still like them. I don't know, call me crazy, but I still like them. And this guy likes them too. So read this article, very, very good article. Okay, now let's go back to talking about the general theme. What I think is going on with the market is the market just doesn't care anymore about earnings. Like earnings, the first time of this year in January, like when good earnings happened, stocks went up. Like the market responded so positively. Now with all the other stuff going on, it's almost like good earnings aren't enough. It's like, as impressive as they are, companies are making billions of dollars in a quarter. It's not enough to impress anybody anymore. That's kind of the feeling I'm getting. So I'm going to show a chart here with Amazon. Again, they reported that they had 100 million subscribers to Amazon Prime. That's so many customers being loyal to your company. It's like any company would kill for that. And yet, as you can see in the chart, it went right down after that. Caterpillar had good earnings. Their stock went down right afterwards. And you can look up their earnings because I can't find an article right now based on it, but you can look up their earnings that was reported in April around this time. They went up at the beginning of the day when they reported earnings, and then they came down again. So it's like it was cool news for like 10 minutes, and then again the yields came back and just rained on everyone's parade, and then just kind of ruined everything. Same thing with Google. They had a pretty solid earnings report, and the street didn't like it that much, and their stock went down. So the only one that actually did very well today after their good earnings was Boeing. And so a couple articles that we have here is Boeing to open plant in China this year. CEO Molenberg says, so you can have a read about that one. But it says they're assembling some 737s at his plant near Seattle, but they're going to send some planes to China for completion at the new plant, a joint venture with a state-run Commercial Aircraft Corporation of China Limited. That was one thing I just read here. But yeah, so give that a read. I mean, if you like Boeing, if you have no interest in investing in Boeing, you can totally just ignore this. This other one, Boeing cruises past forecast, sees no sign of cost trouble. So I guess analysts were worried about their costs or something like that. But yeah, they kind of ease concerns with that. And then the last one, update 1, Boeing defers Iran deliveries, eases output concerns. Again, I haven't read too much about this, but yeah, so Boeing had solid earnings, and their stock actually did do well. They went up like $13.80 today, 4.19%. So now let's see how our stocks did. We can finally go back to the screen recording here. So yeah, Boeing was our top gainer, but we only made $887. But it did go up 25%. But you can see on the right-hand side, we're still down a lot with almost everything. We're getting hit pretty bad. And you can see our stocks here also did very bad. But it wasn't a bad day compared, it was our least worst day. We only lost 1,400 compared to the other ones, or 1,500 compared to the other days where we lost a lot more. But you can see here, these columns right here are our gainers. I sorted it by who made the most money for us today. So you can see there, and then you can see our losers were, all of these. NVIDIA was our biggest loser, but our biggest percentage loser looks like it was Activision Blizzard. And yeah, so we're just going to leave it at that. It was a long video, so a lot to talk about. If I could summarize this whole video for you guys, to if you're asking yourself, what do I do with all this information that you just spit at us? Look at the articles in the description. Take your time. Maybe read them while you're having lunch. Read especially the companies that you're investing in personally. Read those. Read the stuff about the inversion with the yield curves, because if you don't know how those work, educating yourself like I'm doing right now could be pretty beneficial, I think, just to get that knowledge in there. I would read that, and then I'm going to talk about tomorrow. I'm going to try to talk about the conversation I had with my friend today about where I think the market's going, because I didn't talk about it today, but I was looking at the S&P 500 chart, or the Dow chart actually. I was looking at the Dow chart from the history and looking at where I think it's going to go, and I'll talk about that tomorrow because I don't want to drag on. But I did make an observation about that, so I will talk about that tomorrow. Thank you guys so much for watching. If you like this video, please hit that like button. Sorry if it was kind of long, but thank you guys so much for watching. Hope you guys had a good night, and we will see you tomorrow.